Hello, everybody. My name is Robert Covell, and this is my free stock guide. All this is going to be free. This is just my way of, conveying my message, conveying how my tactics are used in terms of the stock market. I really wanted this to be my first, somewhat bigger platform. I'm an investor of almost 6 years now, coming on 6 years, and in a field or category such as the stock market, you need a lot of credibility. You need to have sort of an audience or following, and I don't really have that in terms of stocks quite yet. So I figured the best way to get my message across in a legitimate way is just to make all this free, and results speak for themselves. So if you really enjoy this program, if you like the way I invest, or if my way of investing kind of correlates with yours, donations are greatly appreciated. You know, all this research and stuff that I did over the years, it took a lot of time, and it took a lot of effort. It took a lot of planning, and I even have a correlation report to prove that nobody can predict where the stock market's going, but it's at least a more effective way of estimating, or sort of using the process of elimination in terms of which stocks you should be buying. So, anyways, let's get right into it. This is my free stock guide, and this is just right here is just the following of major key points that I judge in a stock. As you can see, this is my correlation report. At the top, it's listed. It's like a scaling system, sort of. All this, imagine it as a scale. Pours from 14 to 21, average, yada, yada, yada. And it has all these key points listed, and I rank them from worst, average to best. However, if it's kind of vague, as you can see in the middle where it says event correlation or something like industry high, if it's somewhat high, or you're not sure if it's like entirely high or if it's in the middle, just put a brief description such as somewhat. This will be your key. This will be your way of assessing whether this is actually working, and I encourage you to do it, because if it's not working for your type of investing or your specific field, such as if you do penny stocks, which I have no idea why, or if you do a different sector that might be oblique to this, then don't use it. But I typically invest in U.S.-based stocks. I invest in all kinds, so I think it's more of a generalized thing, but make sure it works for you. It's based off of the most trivial things, fundamentals, of course. You got earnings, low PE ratio, technical analysis, things of that nature. But there's also some things I won't go over in this segment, but things such as industry high, like that stuff you can just like look on your own, and you can just like Google that stuff. Like it's not really a tactic that I have to go step by step in teaching you how to do. I'm pretty sure even if you're a new investor, you know how to check that. So we're just gonna skip over that and just focus on the main things. Um, so at the bottom you have the score. It's I assess, this is my gain off win resorts. I don't know if this is typically wrong. I never really focus on a stock after I sell it, but I typically sell it within like the 3 to 5% range. I just That's just the type of investor I am. I don't know like if I could have done better or worse. I never really assessed that, but that's what works for me. So I'm gonna stick by it until I'm corrected otherwise. Yeah, so it has all the stats on the bottom. If you notice, it is almost within the good range. It's 30 out of 42, mostly in the average. So yeah, I still got a win out of that. So essentially, from this correlation report that I've done, and I have like over 50 of these reports. I can show you them, but it'll make the video a whole lot longer. So this is just an example. But typically, if it's within the above, I'd say 32. This one might have been just a fluke, but if it's above around 32, I typically get a win from it. So make sure you get above 32 points if you want to be like really confident in buying a stock, such as buying over like thousands and thousands of shares, or some of that nature. First, we want to check on earnings. So basically, what I try to do for the whole thing, by the way, I'm just going to do my personal way of assessing it. So yeah, you can do it your own way, but this is what I found works for me. So as you can see, right at the quarter three on the first one, it is slightly a beat. right? So they beat their earnings the first time, the second time miss, third time beat, miss, beat. I sort of follow a pattern. Now, this isn't the best way of just guessing what the next earning might be, but if you have an example, for example, if you have something like beat, miss, beat, miss, beat, miss, like a continuous pattern, you can expect the next earning to be whatever the last one wasn't, if that makes sense. But if it has a history of beats or anything like that, or history of misses, then you should expect what prior information shows. But for something like this, it's not too much of a pattern. But however, they do. This is Disney, for example. They do typically beat their earnings, so I could assume that quarter three could be a beat. So that's how I assess that. Again, none of this in the stock market is like you're not going to know for sure 100% what's going to happen. You just got to go with based off prior knowledge. Next example, or sorry, next tool in assessing stocks is the P/E ratio. I typically look for a low P/E ratio, anything within around the 10 to 20 range. Um, that's what I go by. Equity summary score. Now, the platform that I use is Fidelity. Many people out there might use eTray or another platform, but I use Fidelity, so I'm not sure if they have these type of tools on like other platforms like eTrade, but I do recommend Fidelity. It's a widely used platform and has a ton of tools. Low commission. I think it's like $4.95 now, but basically I look for a summary score of within the 7.1 to 10 range, and basically it's just a compilation of all these investor sites, like their opinions or like their like data backing up what their equities like and cash flow. So anything below 7, I don't typically mess with. 5 to 7, that's manageable depending on how good the other data is, such as technical analysis. But I typically look for a high equity summary score. This one's gonna be a little bit hard to tackle. I have to list stuff in the description to like show how to actually do this, but I'm gonna try and wrap this one up pretty quickly. This is a little bit hard to explain, but basically I have 3 different indicators on this site called TradingView, and what it essentially does is it makes a technical formation called the Golden Cross, and that's one of the most bullish patterns that exists. As you can see, as you can see that once it, if you see the light green bar, if you correlate that with the information at the top, such as when it, like as the green bar approaches bigger and bigger and bigger, once it hits that dark green bar, it starts to go down. So what my method is look at the diagram to the right. Once it hits that first red bar, that's typically when it's at its lowest point. Now you want to correlate that with the crossing of the signal and the MACD. The signal is the red line, the MACD is the blue line. You want the blue line to go almost completely straight up, right? And the signal to go horizontal. Again, this one's kind of hard to tackle. I can go on and on about this, but I'm sure I'm like already taking enough time just talking about it. But yeah, so I can list more information in the description or wherever I post this. But yeah, in terms of dividends, I don't worry too much about dividends because I'm a short seller. I don't typically hold stocks for a long period of time. But the average dividend yield for when I last updated it was 2.22%. As you can see here, this is for Disney, for example. The market median is 2.32%. So on average, it floats at about around 2.3, 2.28, somewhere around that. So it's pretty self-explanatory. I just assess where it ranks. So Disney would be in the average range. Yeah, pretty self-explanatory. And the last thing is a really good tool. This is from the Fidelity platform as well. This is just a risk rating in terms of all the sites combined and what their assessment is on it. And yeah, that's pretty much it. It's pretty fundamental. There's like when you get into the technical analysis, there's a lot more digging, and there's a lot more, looking at like minor tweaks and stuff like that. But essentially, it's all based on fundamentals. One thing I will say, two things I've learned over the past 6 years is don't don't base your selling on whatever a site like StockTwix says or something like that, or what your friend may say, or what anybody may say. They don't know where the market's going, and neither do you. And it's especially frustrating when they say this, but the market says otherwise. And they say something negative about the stock, but it goes up. So just don't listen to that, and don't even listen to the media, because if the media already said it, then it's already been done. The damage has already been done. If there's a ton of people talking trash about one stock, it's too late. They already beat you to it, right? So for the most part, unless you want to save like a percent or two, but for the most part, it's already been done. And last rule is don't invest in penny stocks. I've had a friend who's lost about 16K on the stock NTFL, and I don't know why he did it. Him and I were doing so good back in high school, and I remember one time we did invest in this one penny stock, and we made a pretty penny like in a day. Like I think it was like $600, and that's fun. It's like it gets you like an adrenaline rush. Like holy crap, how did I make this much money in a single day? But at the same time, it can ruin you. Like he got ruined. He was like down 16K, and he just had to sell it because it just kept going down and down and down. So yeah, another thing, don't invest in penny stocks. It is stupid, and I don't advise anybody to do it. But that's it for the video. Yeah, bye.